We've got Mr. Krishna Kumar Natarajan, who's Managing Director and CEO of MindTree, who he joins us on the show from Bangalore. To begin with, visibility for the sector is fairly uncertain at the current juncture. How has it been for MindTree, and has there been any change in the stance of the company since we last spoke to you?
I think the visibility, as we talked about in April, still continues to be fairly short in terms of time span. Now, like I shared with you a couple of months back, I think clearly customers are a little more cautious on decision making, but we are not seeing any negative messages from customers. Clearly there are conversations on clients are getting little more scrutiny in terms of investments, and the sales lead times are elongating, but clearly there are no negative or pessimism in our conversations with customers.
Mr. Natarajan, afternoon now for your company, which initially focused on fewer segments and gave an enhanced thrust to the banking and financial services vertical, which was from being a small contributor a few years ago, it's become the largest. Nearly 21% of the overall pie comes from this segment. Is this likely to continue?
What we are seeing particularly in the BFSI segment is that we are seeing a new category of customers, which is really the mid-size banking and financial services institutions, really coming into leveraging offshoring as a way in which they'll do business. And again, if you have to look at secular trends there, the insurance segment still continues to be strong. And at MindTree, we're very focused on the property and casualty insurance segment. And the demand there continues to be, there's no negative sentiments there. And even in the banking and financial services segment, we see a number of mid-size banking and financial services customers starting to leverage offshoring as a way in which they'll do business. So we continue to expect reasonable growth in the BFS segment.
Right. So Mr. Natarajan, can we expect that the first couple of quarters of the current financial year is going to be a bit of a sluggish period for you, and that going into the second half of the financial year, things could look up and make up for growth that you lost in the first half of the year?
I think that's a very accurate way of capturing. Since we are seeing delays in decision making, but conversations are on and decisions are taking a little longer, the first probably half of the year will be sluggish, primarily on a quarter-to-quarter growth perspective. But we certainly see at this point in time far more positive outcomes for the later half, that's half year 2, to be robust in terms of growth.
And what about your margin picture? Because most of the analysts believe that you could improve your margins by 80 to 100 basis points from the 18.7% that you clocked in Q4. Do you think that this is on track?
Clearly, as we have indicated to the market, we continue to work on margin enhancement strategies where I think there is clearly opportunities, and we'll continue to demonstrate margin improvement every quarter-on-quarter basis. So we are pretty much on track on that to say that we will improve margins. Since we don't give guidance, I cannot comment on the specific numbers which I had indicated, but clearly we are on track to demonstrate margin improvement quarter after quarter.
Now, Mr. Natarajan, some analysts are of the view that there could be a risk to your near double-digit growth outlook in product engineering services due to ramp downs by a couple of clients. Do you view that as a risk?
Clearly at this point, in the short term, because of these ramp downs, there is sluggish growth in our product engineering business. But if we were to look at current conversations we have with customers, I think the number of opportunities which we are looking in the product engineering services have increased in the last 4 to 5 weeks, which gives us the confidence that yes, in the product engineering services also, there's good chances that there will be more predictable growth in the second half of the year, which means we could still target to be close to double-digit growth for the financial year 12-13.
And there are also some expectations that the pricing could come under pressure for the industry. Have you received any demands whatsoever from clients for price cuts?
Clearly, we are seeing a far more stable environment on the pricing. We have not received any pressure from customers on pricing. All our renewals which we have done in the quarter April to June, particularly with some of our technology customers, we have even been able to get some marginal price increases. So clearly we are not seeing any negative sentiments on the pricing. We would expect the pricing environment for FY 12-13 to be fairly stable.
And one word, Mr. Natarajan, on employee costs. Given the environment that we are in, do you believe you would be in a position to hold down salary costs?
I guess with the way the challenges are overall on the macroeconomic environment, I think the expectations of employees on compensation increase across the industry is going to be muted for the current financial year. We certainly anticipate it will be lower than last year, probably in the high single digits is what we anticipate employee cost increases to be.
And what is the deal pipeline looking like at this juncture? Will we see ramp-ups from large deals that you won in early FY11 and late FY11 and early FY12?
See, some of them, particularly the ones which we won early in FY11, have already sort of ramped up. There are one or two which will see some ramp-ups during the second and third quarter. But like I indicated earlier in the interview, there are multiple conversations in terms of the sheer size of the funnel still continues to be reasonably healthy. And we do anticipate over the next 10 to 12 weeks, some of these decisions will come in. And those are the ones which will really help us ramp up during half year 2. That's really what we are fully putting all our efforts in, to really focus on some of these opportunities which are chasing, try and close them in the next 10 to 12 weeks so that will give us really the opportunity to ramp up during half year 2.